Good morning, folks. This is going to be a recording of my Euro-dollar long scalp this morning. And it starts with the order block. Okay, that's what it looks like. You can train your eye to see it as it happens. Okay, and what I'm looking for is I'm expecting the previous day's high to be ran out. You saw I was able to capture a portion of that. You can see all the trade details to the left. But now I'm looking for the liquidity resting above the 118 big figure. And I believe it's going to start by run above 117.92. And I want to be a part of the move after the retracement at 7 a.m. New York time. So it retrace a little bit, trade down to a bullish ICT order block. And I'm waiting for expansion to occur. That means I want the candles to start reaching for and up to that 117.92 level, and then try to spread further and higher to see if there's any buy stops up there, because folks have looked at yesterday's movement at 17.92, and as I'll indicate and show you in this recording, there's a lot of supposed retail sell signals that are going to be seen in the indicators. And if you hear the background sound, I'm outside on my deck, so you guys will have to pick up on some of the ambiance in my neighborhood here. So you're going to be seeing the market want to come back down and retest this area here. Okay, you can see the first response. Beautiful, beautiful reaction off of the ICT bullish order block. And this is what you would come to expect by all the jawboning you've heard me do in the past in my tutorials. Trying to turn over a new leaf here and not be so arrogant, but I can't promise it won't come out once in a while. So here's the initial run on the intraday high, and the market will still come back. It'll fall short right before running out the previous day's high at 117.92. And whenever this happens, I mean, people know previous day's highs and lows. They see it. You'll look at them as support and resistance ideas. But many times they're quick to just sell short based on a indicator being overbought, overbought with some measure of some kind of a bearish divergence. And I'll show you a few of them in here. But the market's starting to trade back down, just gapped down on some news at 8:30 and went right back down exactly to the ICT bullish order block. Didn't go one pip below it. It went right back down to it again. So at the moment, right now, this is a buy again. Now, I'm not going to do it, but I'm showing you where, again, it went right back down to that same level. So nothing's changed in regards to where that buy should take place. But you can see here, bearish divergence. Retail's all over that, trying to sell short. Overbought, but you're trying to sell short. That's not the way to go. Okay, so take note. Everybody wants me to put on TradingView my views, but this is dynamic with me. When you're on social media with me and you're watching through my Twitter, you're actually seeing things as I see them and talk about them, so I can alert you to what I'm paying attention to, which is far better, in my opinion, that anything on TradingView would be. TradingView is a static little chart that I'll update later on. The markets are too dynamic, and you need to be nimble. All right, so the market's starting to rally here, and I have my orders set to take two off above the previous day's high. So as soon as the market does eventually make its way above the previous day's high, I'm going to scale two of the three standards that I have on off, and then I'll be able to move my stop loss up to a point at which it can't take a loss. Okay, now we're trading above it, so now I'm going to want to be taking two of those standard lots off. Okay, so now I only have one standard lot on, and my stop loss has been moved to a position where I can no longer weather a loss. Okay, so now I'm in a really good position to be in, and I'm looking for 1810, and my order at 1820 is in the event that it spikes in my favor. Now, I kind of want to give you a little tip here today. Many times we fear having our stop loss in the market or too close to the marketplace. Today, I trailed it up ultra tight because cable has been on a real tear going higher, And I just didn't trust the euro dollar to not mess around with me during the New York session. So I wanted to keep profits locked in as close as I possibly could. I've already really targeted the previous day's high anyway, so I don't want to be messing around with losing open profits based on, deeper retracements. I don't want to sit through any kind of retracement. So now what I'm looking for is the support to be found at the previous day's high. And it does come down to it, dips below just a little bit. And I make the mistake of putting the stop loss a little too tight, but that's okay. One of the things I mentioned on Twitter today was there's nothing better than taking first profit and putting your stop in a position where it doesn't take you out below your entry, or in case if you're shorting above your entry. In this case, I'm in a good position. I'm in a sweet spot, if you will, because I really don't care if it stops me out. I'm not afraid of who's going to judge me on social media, because I basically called a move that makes sense. It's reaching for liquidity as a bank trader would be targeting. My way of trading is aligned with that. It doesn't agree with anything retail. So one of the things I really want to draw your attention away from is the necessity of using indicators. You can pick the direction pretty consistently, and not only the direction, but you can pick locations where price is going. All these notations I have in the chart here are all based on what I teach, which I haven't been open about it in public, and I won't be, but the interbank algorithm. Okay, what makes price go where it's going to go, and I highlighted it here before the fact. So I don't want to put these types of things on TradingView, because like YouTube, everything's going to, everyone's going to mimic what I do, and I made a brand for myself, and I kind of want to be unique. So you can see here my stop gets taken, and nonetheless it went higher, went above my target 118.10, a little bit higher, just fell short of 18.20. But hopefully you found this insightful, and I'll catch you guys next week. This concludes my ICT trading week for this week.